Hi everyone, hope you're well. This is CoinsKid. Just going to dive into Holochain right now, hot. Sorry I didn't get an update yesterday. I was so busy, niece's party, and we went there, and obviously just didn't have time to update a lot of cryptos yesterday. The channel's very bloated at the moment. It's got a lot of cryptos in there. I'm going to have to try and think of a way of simplifying it. Probably not talking and before I do the technical analysis. Sorry to bore you, but once again, thank you for all the nice comments and everything we're receiving across this channel. It's absolutely amazing that the support that we've got from you, the community that's engaged with these videos. It's amazing, and thank you very much. Okay, thanks a lot for the support and the comments and the likes and shares and everything that you do on the channel. So it's great, it's all good. So with Holochain, then hot, we was anticipating this sort of falling wedge type pattern we got going on here, and at the moment you can see we've broken up and broken out of it, which is great. We've got this level of support off the base here, okay, and so it's all good. So we've sort of fallen down, looks bad, and you've almost could clarify that you've found a bit of a bottom there. You've got a nice bit of volume come up. We're on the 4-hourly time frame at the minute, so what I'll do, I'll zoom out on a daily, because that's what I said to you. Always zoom out. If in doubt, always zoom out. Okay, so I'm sure I made a video update the other day where it says, you know, potentially looking at this level of consolidation. You sort of go up and go sideways, go up, go sideways, and you know, in the future, after this bull run, it continues. This sort of event that you've got going on here will just be sort of like what went on there and what went on there, and you will appear somewhere. Not financial advice, and nothing's certain what we say in this channel, but what you've got in it here is this nice little bounce off this bottom. Okay, so it's good basically. So you've got this nice big candle. You do want to see yourself close today above this level of resistance, which you've broken as resistance. You do want to see yourself back test that as support, so you can actually march on. But what I want to do is bring this level up. I'll just get rid of this lot now. I'll keep that in there. What I want to do, you can see you've wicked down below, okay, on the yellow line. You're basically getting supported by the 20 EMA on the daily time frame, as you did here. You know, you see the little wicks below, but you do get support, and it's confluence to the fact that you're on a continuation trend. You always have to come down and test support basically. So from that top there down to that particular bottom, because this is what happens in crypto, I'm going to remind you. So you topped out and you bottomed out, and you've actually gone through a 48% correction. So that's quite a large correction, okay, and that is very, very normal. That's what happens when you go overextended. You do correct, you find support before reconsolidating and refueling these rocket ships. You know, these candles are rocket ships, and they need rocket fuel, and this is what these lines are. They're lines of fuel and energy to march on and march forward. Okay, so you've come down, you've got that retest of rocket fuel. That's fantastic. You know, and look at this particular correction down there. So you got a correction down there, all the way, you bottomed out down there, and again that was a 50% correction. So it's very commonplace. I want you to think that this is like rolling over and going to zero. Like I've said to you, I've given you that signal. You know, if you do start losing these EMAs and you start coming down even more, losing the 55, that's a really major signal of a reversal. Okay, so you've got that in your head right now. So at the moment, just want to reassure you that what you've gone through with hot there is perfectly normal, and it's part of the process of evolving and continually taking these steps up to further price appreciation. So what I wanted to show you here is this is a swing low. Okay, so basically you've gone up in a swing high, you've gone a swing low, swing high, swing low. Do you see that? Each time you found a base, and that's your base there. Okay, and then this particular swing low is your base there, and then you know that's your base there, sort of thing. Do you see that? You go up in stages like that. Swing high, swing lows are called. So with that, you can drop a tool on now called the Fibonacci extension. And what you do, you drop it from the, where is it? It's the third column down there, and you drop it on, it's there, fib retracement. Okay, and what you've done, you've gone up and you start to fall back. It's called retracing. Okay, so what you do, you're retracing. So what we need to do is find the base, which was the bottom of that previous swing low, because what you do, you've gone up in a swing low, and as you've gone up, you made a new swing high, and what you do, you're falling, basically retracing, okay, to a level of support, and traders are targeting these areas. So you found your base there, and that's a previous swing low, just like I've said to you, the swing low. Okay, hopefully now this is the swing low, and you're not going to fall any lower, because what you've done, you've actually retraced. Okay, this is called retracing. You've retraced down, you found a level of support, and you've bounced. Look where you bounced, look where you found your support. Okay, on the 0382. Fantastic, really strong. When you zoom out on the daily time frame and you're bouncing off of 0382, it's a really strong uptrend, continuation trend. Okay, because if you was to start losing this particular level now, you lost that level, then that would be your next level of support. Okay, and if you're to lose that, then you're looking at that, which is a golden ratio. Now if you was to ever lose that when you retrace, you're looking not a retracement, not a correction wave where you come down and bounce. you're actually looking at a reversal trend, and that is confluence to the fact that when you lose that level there as support, you're reversing and effectively coming back down to the previous swing low. Do you see this? So effectively it's a full retracement. Basically you come back down and you're going to retest this previous swing low as a level of support, and potentially if you lose that, then you roll over and you fall through, and then you're looking at a larger correction of things. So far so good, and I kept saying that to you, that so far so good. You're holding support, you want to see yourself come down to the yellow line, that's your target and stuff like that. And in the future, if if this does roll over here and you start losing these levels, then they're your exit strategies basically. Okay, and I'll always be transparent with you in this channel. I'll always tell you how it is. So yeah, at the moment golden, you've got this sort of bounce off the 0382, which when you zoom out on the daily, it looks awful on the 4 hourly. If you look at the 4 hourly, look at the 4 hourly time frame, it just looks like you're getting absolutely smashed up here on hot. When you look at that, okay, and you look at that, how horrible that is, it's just down, down, down. But you found base on the 0382, okay, and you can see what you're doing right now. I'll just tidy this up for you so I can show you now on the 4 hourly. Yeah, so basically what's happened is you've basically retraced, all right? I know I keep saying basically, and it's like I used to say guys a lot, and I've like compensated it basically or effectively. I do apologise. So it's just word compensation. So what you've done is you've bottomed out, and this is a fantastic area that you've bottomed out on, okay? Because if you'd have gone down any more, you would have gone really far under the EMA on the daily time frame there, and that would have been sort of a really key area to find support. It is usually in a retracement, okay? It is sort of a mid-park retracement level of support, and it's a very, very strong level of support. You do see a lot of projects come down to that, but the fact that hot has actually come down on the daily time frame as well. On the daily time frame, it's come down and bounced off that is really, really good. I want to reassure you that is a really strong area that has found support. Okay, so it's golden at the moment. It's golden. So what you're doing now, you basically come down in a corrective wave just there, and you form this base, and hopefully now what you're doing is forming a new impulsive wave, because just like this is here, it's impulsive wave up, corrective wave down, impulsive wave up, a corrective wave down, which you've entered a level of consolidation, and you're forming a bottom because you've come down to the previous swing low of this impulsive wave. Do you see that? So you've lost like the lower waves of support on the 4 hourly time frame there, but when you zoom out on the daily, you're actually above the daily impulsive wave, so to speak. It's hard to understand, but do zoom in and out on your charts and you'll see the waves. Okay, I'll just show you quickly. As you can see multiple impulsive and corrective waves on the 4 hourly. Look, this between here, you got 1, 2, 3, 4 impulsive and corrective waves there. Okay, but when you zoom out on a daily, it's just one big impulsive sort of swing low, swing high to swing low sort of thing, and this in between is just, it's noise basically. It's nothing because you didn't hit a long level of consolidation. So this is why you target your fibs, the longer level of consolidation where you get the longer swing low, sort of thing. Okay, do you get that? So anyway, zooming back in on the 4 hourly time frame here, you can see you've based out, bottomed out hopefully, and now you're starting to go on and form your next impulsive wave. Hopefully this is this impulsive wave, because when we went up here, okay, when you're going up in these waves like this, we topped out here and we rolled over, and we were hoping that this was the form of the next impulsive wave. Do you remember that? But obviously we went up, we hit a level of resistance, okay, and we rolled over. Now you could still do the same here, because what you're doing, you've come down, you've hit this space, the 382, you've started to come back up, and you're hitting your head on the 0236. So what you need to see is you get above this, because if you can get above that, that's really good. Okay, if you can get back above that and sort of back test its support, that means you are looking at this really strong next impulsive wave, and you have actually formed this kind of bottom here. Failing that, if you do see yourself roll over here and hit it as resistance, you may potentially start to come back down and then retest this level here as another retest of a low, forming a W double bottom. See, like this, okay, this sort of pattern where you've got this level of resistance there as well, which we'll target in a future video. But at the minute, you do need to see yourself get through this level of resistance, so you do need to stay hot, closing above 002106111. okay, it needs to close above that, then back test its support, confluence to the fact that you've got this next impulsive wave. Because if that is the next impulsive wave, you can drop a price prediction on that, okay, moving forward, and I'll show you that right now, what your future price prediction is, providing you can obviously confirm that this is an impulsive wave and not just a sort of bit of a fake out where it's going to hit its head and roll over and come back down. But what you've done, you've actually broken out of this sort of you see this falling wedge type pattern, and these are basically a continuation pattern. They look bearish, they look negative, but they're not. They're just falling back on support, and usually when they break out, they come back up to where they formed, and obviously you formed up there, so you would be looking at that full retracement back to the previous all-time high. Do you see that? So what I'm going to do now is lay down a future price prediction for you. So I'm going to remove this fib right now. Obviously keep that target in now, drop that in as a key area to get through. Okay, so that's a really key area now that you do need to see yourself get through for hot right there. Okay, but what I'm going to do, if this is now the impulsive wave, you've got the bottom here, you've found the bottom in this retracement, okay, and you're marching on, you can actually create a price prediction from that. So what you're going to do, drop your fibs out, and you go from the bottom where you think is the corrective wave down, and then you go to the top. Okay, so you put your 1 at the top and 0 at the bottom on your fib, and that gives you, with the extension, a future price prediction. So you could see if hot has now bottomed out down here at the bottom, and it's starting to march on, and this is the impulsive wave. And again, you're not just going to get there overnight, you are going to run into levels of resistance, and right now you are in that 0.382, which is resistance on this impulsive wave. Okay, so you do need to see yourself get above that, get above it, close, get above that, close, get above that, close, get above that, close, and off you go, because that is your price prediction just there, the 1414. Okay, I don't think you'll get to the 1618 in a big impulsive wave, because you've really fell through the EMAs there. Okay, if you'd have bounced off the EMAs and you'd done well, you would have been looking at that bigger impulsive wave forming, which would take you up to the 1618 there. But from a conservative point of view, I do think that providing you can get through these levels of resistance now, back test them as support, you're looking at that price prediction right there for hot. So it's all good at the moment, it's all good. Hopefully we've got this reversal, the market starts pumping, and hot goes with that, because you're looking at that price appreciation up there at 0.0415994. Okay, and from here that is a whopping 100% trade right there for hot. So it's all good, it's all good. What you do need to target, obviously, I'm going to be fully transparent with you, you do need to see yourself march on and get through these levels of resistance. Okay, so drop the fib on your chart. So obviously you got to get through that level there, okay, which is roughly around the 0.382, which is 0.2209274, and then obviously you got to get through the 0.5. Just stretch this out, you might be able to see it a little better. So you got to target these levels, because at the minute you can see you're hitting your head on it, hitting your head, and you're rolling back down. And what happens when you're rolling back down? You're back testing where you came from as support, 0.236. Do you see that? So you've got up, you've marched, you've formed this bottom, you've gone up, you've hit your head, you're rolling back down. Okay, but you are at the minute above the EMAs on the 4-hourly time frame. Do you see this red line? You are actually above that. So you're going to sort of hover around a bit, consolidate, because you have that. There's a massive pump that is from that bottom there. You're talking a whopping 26%. So it's not just going to take off to Mars. You're going to hit your head on something and roll back and back test the support. That's perfectly healthy. That's what you want to see yourself doing. Okay, so I think, you know, providing you can stay above this red line now and start to creep up and back test that and get through it as support, you know, and then get through this at 0.50. This is a really tough level to get through, by the way. I'm not going to lie to you. This is a really tough level. You may see sort of hot sort of step up and have loads of goes at it before eventually getting through it. But when you get through this level here, which is called the golden ratio, okay, the 0.618 golden ratio, that's basically like you've got a ticket to Mars, okay, and you're going to see that full sort of retracement there, back up to the previous all-time high. So it's all good. So again, you've got like a little long opportunity here. If you do see it fall back to this red line, okay, I would personally open a bit of a long there and sort of sit back and chill, because you could be looking at a whopping 59% trade up to that previous all-time high, and obviously it's going to get choppy along the way, so do keep an eye on it. That's hot. I hope you enjoyed that update, and then obviously if you do sort of roll over, you don't want to be sort of coming back down to this low here, which is currently at 0. I'll drop that in so you can see that. You don't want to be coming back down to that low, because you're sort of invalidating this breakout of this falling wedge, okay, and you're falling back into it, and then you're invalidating the upside of this potential reversal pattern that you've got going on for hot. So you can't see yourself come down to 0.0162197, because you're sort of reversing this reversal. Okay, I hope you enjoyed that. On hot, it was quite long, and I'm sorry if it bored you, but I've been trying to be quite thorough there. Do take care, stay strong, stay safe, and most importantly stay tuned, and I'll catch you tomorrow in another update on hot. Bye bye.